You're listening to the Options Insider Radio Network. For more quality options programs, visit www.theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app, available in iTunes and on Google Play. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.
Join us now for the expert source for inside information on the options markets. It's time for Options Insider Radio with your host, Mark Longo.
Welcome back to Options Insider Radio, the interview program here on the old Options Insider Radio Network. My name is Mark Longo from the aforementioned network, as well as, of course, from theoptionsinsider.com. If we sound a little bit different, it's because we're not coming to you from our studio in Chicago. We're actually coming to you from scenic and sunny Fort Lauderdale for the Inside ETFs conference. It's an interesting one, obviously a little bit different for us, a little change of pace, checking out the ETF side of the world. And I'm joined now by our next guest. He's a newcomer to the program and indeed to the network. He is Rolf Agather, the Managing Director of North America Research for FTSE Russell. Rolf, welcome to the program.
Hello, Mark. It's great to be here.
And as we are wont to do with all of our guests, why don't you go ahead and give us a quick overview of your background and how you found your way to FTSE Russell?
Certainly. I've actually been in the index business for a number of years, starting with the Russell indexes prior to the merger of FTSE and Russell. And on the research team, really what we do are two things. The first one is we do a lot of development of new indexes that you see underlying all these great index-based products. But another big part of what we do is we try to provide education and information to the investing community.
And speaking of education and information, one of the things I know you guys, I always love when guests come to me armed with data. And I think you have some data in terms of your 2018 Global Advisor Smart Beta Survey. Why don't you give our listeners some of your overview of your findings and maybe any interesting surprises or takeaways that you came out of that?
Certainly. So this is the launch of our 2018 Investment Advisor Survey. And the real purpose of that report is to really try to get a feel of what's really going on. As we know, there's a lot of talk about smart beta, a lot of products coming to market. It's easy for investors to get confused. So the real purpose here is to look at the US, Canada, and the United Kingdom and really understand in a broader sense what are advisors really doing. So a lot of the report is asking questions of advisors in terms of their awareness and usage of smart beta.
And what were some of the interesting and exotic and surprising takeaways from that report?
So I think one of the first things is, even though smart beta does seem to be a relatively new topic, when we actually tested for awareness, so the advisors that were actually aware of what smart beta was, we actually got an 80% response rate. So across the three countries we surveyed, the US, Canada, United Kingdom, about 80% of the advisors were at least aware of smart beta. They'd heard the term, they've seen the products, and we found that about 50% of the advisors had actually used a smart beta product. So I think it's definitely maturing. Smart beta is maturing as a concept, as a set of products for investors.
Maybe I should probably cut you off there because I'm probably maybe assuming too much on behalf of our audience. Maybe some of our audience isn't familiar with what smart beta is. Maybe we should start there, defining exactly what you mean by smart beta for this report.
And that's a great point. And again, something we looked at our survey, because I think there has been a lot of debate about the terminology. I think some people get a little sensitive if they hear the term smart beta because it implies that maybe there's dumb beta out there, right?
So I think other beta is dumb.
That's right. And so I think we really want to stay away from that. And really the key here is to think about smart beta as a set of, they really look like indexes, right? They're very rules-based, just like a traditional index, and they're very transparent. So we actually publish the rules that we use to construct the indexes that then underlie these products. So I think part of what smart beta is bringing to the market is, a lot more ways of creating investment outcomes beyond traditional index funds, but in a very, very transparent way.
It does seem like there's a lot of talk about beta at this conference. Different smart betas, different beta weighting ratios. Beta was kind of, the low-hanging fruit. It's what everyone got for so long. It didn't seem like it was a sexy topic, and yet all of a sudden, for some reason, 2018, it's the hot topic again. Why is beta suddenly a hot topic of discussion?
I think the simple definition of beta in a broad sense is it's a systematic sources of return. So if you think about when you're looking at accessing beta, you're not trying to pick individual stocks anymore. And I think traditionally picking individual stocks and finding better stocks than others, the realm of active management comes at a cost, right? It takes a lot of data, a lot of research to really be a good stock picker. So I think the whole concept behind beta is you're now looking for more systematic sources of return, and we can actually reveal that in an index at a much lower cost. So a lot of what's going on today is actually being driven by cost. We're actually helping lower the cost of investment management for all investors.
Is the notion of smart beta really a way to try to somewhat bridge the divide between active and passive? They seem to be two very, ideological schism camps. People who are on one side, a lot of the options folks are in the active side, and then we have a lot of people saying, hey, the market's up 20, 30% every year, why? Let's just ride that train and take the beta. Is smart beta a way to maybe take the passive camp and give them a little bit of the shine of active without having to actually make them start rolling their puts and all the other fun stuff?
And exactly, I think that's really what's happening is that, the active-passive spectrum really isn't binary. It's more of it's continuous, right? And so, like, just as you said, we see cases where you have investors who were traditionally invested in a broad market index fund who maybe want to get a little bit different performance, or maybe they want to manage their risk, or maybe they want to get like higher yields. Rather than having to go into a fully active product, they can now use smart beta to get access to new segments of the market to achieve different outcomes. Similarly, you look at a traditional investor who would maybe use active funds, more traditional mutual funds. Maybe again they're paying higher fees. They want to get a little bit lower cost. Smart beta gives them an opportunity potentially to lower the cost of investing, but still get access to the markets that they're interested in.
I come from the options world, which is traditionally kind of lumped into the active camp. Even trading at least once a month to roll and things are usually probably more active than someone who's just riding the beta wave, shall we say. But we saw last year again continued massive inflows into passive ETFs and index funds across the board. You're studying a lot of indexes. You have an index background. Do you feel that the headwinds are really starting to mount against active when we see 60, 70, 80% of inflows flowing into just pure beta plays effectively and pure index plays? Or do you think it's more of a sign of the times where everyone's seeing a strong market, they want to kind of jump in, and if we have another down market, we'll see active starting to take another, or at least maybe a less aggressive bull market, we'll see active starting to take a bigger share of the pie again?
Mark, I really look at this as more almost a traditional evolution of an industry where you're starting to see more technology being employed in the practice. So if you think about traditional active management, stock picking, it was much more of a human activity. You really needed the skill and judgment of an individual who could analyze data and use their judgment and discretion. What we're really doing is we're taking some of what has been getting systematic sources of return, and we're letting the technology, the computers now, are actually doing more of the work of figuring out which stocks are driving some of the systematic sources of return. So, to me, it's more about, as in any industry, technology increasingly being used and leveraging the information we have at hand.
Speaking of information, we're at this show. It's obviously a big conference. It's an interesting event. It seems like there's an ETF for pretty much every potential interest. If you want to talk about, Brazilian coconut ETF, I'm sure there's an ETF here on the show floor for you to see. Any interesting highlights or takeaways, maybe interesting trends you've uncovered here or heard about just from the scuttlebutt at the conversation or at the conference this year that may have surprised you?
Still not a lot of surprises. I think clearly the industry continues to grow. So as I mentioned early on, a big part of my team's job is developing all these new indexes. And just when I think that we've developed the last cool product, another
reached
slate
the
of
pinnacle of indexing.
That's right. And I think so. Maybe one of the things we are seeing more is a lot of the smart beta talk has been focused on the equity world, but I think we're now starting to see the emergence of fixed income. Right, fixed income also can take advantage of these systematic sources of return. So even though in the past you might not have heard about as much about fixed income smart beta, I think you're going to see FTSE Russell and others now start to come to market with more fixed income smart beta type products. That opens up a whole new asset class for product development, and again for the type of information that we need to provide.
You led right into my next question, which was going to be, you were talking about the pinnacle of indexing. You mentioned, already some of the smart beta products in fixed income. What else can we expect? I mean, give us a little hint, give us a little bit of a tease of what's coming down the pike from your team over there at FTSE Russell in the next, 6 months or so.
Sure. I think, well, also, back to the equity side, I think we're still in the early days of exploring multi-factor. So I think once we have defined a set of these smart beta individual factors, if you think about it, there's now an almost unlimited number of different combinations and strengths we can apply to those factors to craft very unique investment outcomes. So I think we still have a lot of room to go on the equity side. As I mentioned, fixed income is still this very nascent area. I love to use that word nascent, right? But it's in the early days, so there's still going to be a lot of development work on fixed income. And then, obviously, bringing those two together, the whole concept of now looking more at multi-asset. So now creating products that combine both equity and fixed income to help tailor very specific investment decisions. Because most investors are multi-asset already. A lot of investors in their asset allocation are looking at equity and fixed income and blending those together. So again, we have a lot of opportunity to develop products that can combine those in one package for the investor.
Anything on the commodity landscape down the road, taking these smart beta approaches and applying to, let's say, a crude or metals or anything along those? I know the notion of beta with those is a little bit different, but still, it's an interesting area, I think, of pursuit.
It is, and I think we have seen what we would call smart beta products. If you think about systematic ways of getting exposure to commodities, and FTSE Russell, we've done a little of that. I think because we're one of the largest index providers in the world, that tends to be a relatively small asset class, particularly for some retail investors. So we generally don't spend as much of our energy on the commodity side. There's plenty of work for us to do with equities, with fixed income, and with multi-asset equity and fixed income.
Just judging by the show floor here, that is
Right.
where everyone, all the effort and interest is spent these days. Well, Rolf, I'm glad we can get a few minutes with you here today. I'm looking forward to seeing how these initiatives and maybe the new fixed income initiatives unfold in the marketplace in the coming months.
Thank you, Mark.
The preceding program was a production of the Options Insider Radio Network. For more quality options programs, visit www.theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app, available in iTunes and on Google Play. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, facebook.com/The Options Insider, or via questions at theoptionsinsider.com.